Happy Friday, guys. It's your boy Stas here. Welcome back to another video. Cheers, by the way. I appreciate you all for tuning in as we're about to break down Sofi stock and the entire stock market, which, guys, at this point, you probably know things are not looking so pretty. Sofi's down over 4%, and every index is getting squashed with the VIX up. Get ready for this. Up over 15%. Yeah, so guys, we're going to break down the charts, my thoughts, what I'm doing. So hit the like button, make sure to subscribe, join my free email stock newsletter, and check out my Patreon for my portfolio updates. All the links are right down below. And now, cheers again. Let's dive into it. So, like I said, we are getting demolished right now, guys. S&P's down over 1.1%, Russell down 1.5%, Dow's down 0.9%, so not that bad, but still down a good chunk, as QQQ's down 1.4%. And look, SoFi, which is down now 4.5%, was down even more earlier. We got down to $20.60, which I think at that point we were down like 7-8%. So we are obviously getting hit across a lot of stocks here. We got earnings yesterday from Apple and Amazon. I'm sure you guys saw that, which those earnings, primarily Amazon, that's probably dragging part of the reason that the market's being dragged down right now. And yeah, it looks like here we were down 9% at the worst point on SoFi today. So yeah, in other words, guys, it's not looking pretty. Let me pull up Amazon on a side note to show you guys. Yeah, now we're down 7.6%. And a good amount of stocks, other big tech names are down. Nvidia's down 1%. Microsoft is down 2% pretty much. Apple is down 2%. That gave back the aftermarket gains from yesterday. Google's down, last I checked, 1.5%. Meta is up, right? No, this one's down. Yesterday it was up. Meta's down 2.5%. So yeah, big tech is giving back gains. And essentially the market is seeing a healthy pullback, which it was in desperate need of, which if I pull up SPY and QQQ to show you really quickly before I break down SoFi, you guys can see we're now back at the 180 SMA on SPY on the 4-hour chart, which, not to toot my own horn, but did I not say we were due for a pullback on the indexes to that exact moving average? I was saying that. And here we are, guys. We've seen a nice drawdown on SPY from 641 to about 624. Nice drawdown, about 3%. We're holding the uptrend, right? Buyers could easily come in here. And same thing on triple Q. QQQ hit 577. Now we're at 557. $20 drawdown. And what is that? 3.5%, 4%. All while maintaining the uptrend above the 180 SMA 4-hour chart. This looks great, guys. And this, again, not to toot my own horn, we were calling it. This was the healthy pullback that we needed. And we pretty much outlined this to a T, man. I said, look, post-earnings, once we get these earnings from the big tech names, we might get a sell the news event, which is kind of what we're seeing right now, partly, right? So let me show you now SoFi, going back to this one, down 4.5% right now. This stock's been all over the place. I mean, since earnings came out on Monday, this thing has been all over the place from, or was that Tuesday the earnings came out? Either way, whatever. We went from $21 to $25, down to $20.50, back to $24 yesterday. Now we're, back down to $21.60. So clearly, guys, SoFi is seeing resistance in the mid-low 20s at this point. That's pretty obvious, right? If I pull up the 1-hour chart and I draw out this channel, let me show you this channel right here. We've held support at $20.50 for a good couple of weeks, with resistance at $22.50. You can see that right here. So we were calling this out. We saw the breakout above $22.50. We got the $25, which was good for the bulls at the time. Then we fell through $22.50. We failed holding it as support. a couple of days ago, which was not good. Then we broke back over 2250 yesterday. We tried holding it as support again, which we failed doing so. We then broke back under 2250 this morning. We filled the gap all the way down to $20.60 this morning, which we held 2 days ago. And again, that's the bottom of the channel. So at this point, guys, SoFi, the bulls are fighting for their life. Well, not really, but you know what I mean. At $20 to $21, that's a big spot. And the bulls, again, they're fighting. We held it earlier today. We held it 2 days ago. We held it a couple weeks ago. For weeks, $20, 20.50 has held. So if that breaks, which it's not showing signs of it right now, but if that breaks at some point in the short term here, guys, yeah, we could be slipping. That's the reality. We could be slipping even further. And you guys remember the wedge that we talked about yesterday, I believe? That's kind of still intact here. If I show you on this 30-minute chart, we are still technically making slight, subtle higher lows, but again, lower highs at the same time. Higher lows, lower highs. So what direction is SoFi going to pick, guys? That's the million-dollar question. And as of now, with this drawdown we're seeing, we're actually right back to the 180 simple moving average, which is right around $19.75, $20 a share. We're right at that point, and it looks like the bulls are holding it as of now, which this spot has held throughout this entire breakout, which started in the end of April, early May. So this is a pivotal spot for SoFi at about $19, $20, $21. Big spot for the bulls. And the fact that it's down 4% in the midst of a red day like this is not too surprising, considering how much the stock's gone up. And again, the charts still look pretty good. So we're going to be eyeing it up. Make sure to subscribe if you want to see more updates like this on SoFi, other stocks. Hit that notification bell. And let me run through these other stocks on my watch list very quickly. We have Coinbase getting absolutely throttled right now. Coinbase is down over 14%. This thing reported earnings yesterday, and let's just say they weren't good. I think I might have mentioned them in the video last night, but man, they missed all across the board. They're down 15%. The chart doesn't look, it doesn't look terrible. We are under the moving averages, which is not good, but we're still technically, I guess, arguably maintaining this trend line. But yeah, it's down about $120 a share in the last, 10, 12 days? That's insane. Coinbase is down $120 or about 30% in just 10, 12 days. Insane. So I'm watching this maybe for a recovery rally. I think Roblox is another one that went bananas, then it pulled down. Yeah, Roblox is down 7.5% today. The company reported yesterday. The stock went all the way to 150. Geez, man, now it's down to 127. So Roblox, they reported, let's see, earnings per share. They lost 41 cents, which missed the loss of 36 cents expected, but they beat sales, 1.44 versus $1.21 billion. So that is really what the market is looking at and what the market's running with. The fact that sales for this growth company are looking a lot better than expected, and so is guidance. They're seeing Q3 sales guidance of $1.59 to $1.64 billion versus $1.33 billion expected. So yeah, great guidance for Roblox, and they raised their full year sales guidance. What more could you ask for? So this thing is drawing down because it got way overbought. Let's keep it real. The company's crushing it though, and the stock is definitely still a must watch on this dip. So with that being said, guys, I don't want to spend too much time here. I want to be quick and concise for this video. That's pretty much it. Let me know your thoughts in the comments. Join the email stock newsletter if you haven't done so already. That's free. And check out my Patreon if you want to keep up with what I'm doing in my portfolio. Be a part of the Discord. See how I'm building my portfolio with thousands of dollars a month. That's on Patreon down below. And with that being said, cheers. I'll catch you in the next video.